Hey everyone, Justin from Deep Dive Stocks here, and this week I thought we would do a weekly review, which is a new video series that I would like to start, where we go over the data from the weekly email and the weekly chat from last week, see how the data played out, what we anticipated, and how well the data stood up to the test of time. After this video, I hope that you have a better idea of what is included in the weekly chat, how Deep Dive Stocks approaches data analysis for the markets, and a better understanding overall of how market data works and what is included in the weekly chats. So, without further ado, let's take a dive. The first thing that I usually review in the weekly chats is, unsurprisingly, VoEx. The VoExes that I typically focus on are for SPY and for QQQ. Thankfully, interpreting VoEx lately has been pretty straightforward. That's because we've been looking for a very particular VoEx finding, and outside of that VoEx finding, we have a default bullish outlook. That VoEx finding is a VoEx spike into the propagation zone. We can see here in the highlighted regions why we are looking for a VoEx spike into the propagation zone. It is a classic indicator that a given rally or price appreciation has ended. And as of the 25th, which was the Friday before the weekly chat for the 28th of November to the 2nd of December, we see that there was still no VoEx spike, despite VoEx rising into the inhibition zone. So since there was no VoEx spike, there was no anticipation that the rally had ended, so by default, we had another bullish print from VoEx. Pretty straightforward, really. The next item reviewed is the Gamma Hedging Heatmap, and I typically review the Gamma Hedging Heatmap from SPY. This week's from the 25th, so for the 28th to December 2nd, we see two interesting findings in the Gamma Hedging Heatmap. The first is that the influence distribution had the highest peak or the most probable outlook being negative. In other words, the gamma hedging was situated such that the most likely outcome for the 5 days ahead was a red week. Additionally, we also see that the orientation of hedging really was not supportive because there was no purchasing support should the index fall or volatility rise. The only way that we would get purchasing support should the index fall is a pretty substantial decrease in volatility, which is pretty unlikely. So the gamma hedging heat map overall was pretty bearish. The influence distribution told us the most likely outcome for the next 5 days was downturn in price, and we see that if that downturn in price occurred, there would be very little to no purchasing support provided by the options dealers to help prop the index up. That's a pretty dangerous combo. The next item reviewed were the dealer long puts for both SPY and QQQ. Now, typically, SPY and QQQ have very similar options activity and behavior. However, lately that doesn't seem to be the case, and we see here just that. We see that SPY is decreasing in the amount of dealer long puts that are being opened, whereas QQQ has a persistently elevated and slightly increasing amount of dealer long puts being opened. This behavior difference is seen in the data when we look at the future anticipated price action because of how the dealer long puts are operating or behaving on these two indices. Whereas SPY on the 5-day interval is expected to have a pretty neutral week, we see that QQQ, because of its dealer long put activity, was actually invested to have a positive and green week 5 days out. So overall, this was a pretty neutral to bullish data print for the dealer long puts. And next up is VoEx Variance, which is a pretty new and developing metric for deep dive stocks, but nonetheless is proving to be quite potent and insightful. VoEx Variance measures VoEx throughout an entire sector for every stock inside of that sector and maps out how variable those VoExes are within those sectors. It then maps that variance with SPY as a backdrop so we can get a little glimpse of what the market was doing during these different VoEx variance values. The main idea is that VoEx variance seems to move in tandem even between different sectors. So when one sector is moving much different than all the other sectors, that represents an opportunity for something. And what that something is something that we get into in the weekly chats. Nonetheless, we noted that the week prior, the banking sector showed a return to normal. In other words, it looked as though the banking sector's VoEx variance was moving up towards the other VoEx variances. This indicated a bullish outlook, and we can see here that the outlook was pretty well substantiated, with moves in the banking sector that well surpassed SPY itself. Another finding with VoEx variance is we see that it typically rises after the bottom has been found. And so, since we see VoEx variance for most of these sectors is rising, this did give an additional bullish outlook for the week, and it nodded to a much longer term bullish outlook. But that is something we are definitely going to be keeping an eye on. Moving right along, we get to the LDPM crossover metric, which measures the amount of LDPM, or the liquidity dependent price movements, which is a metric that Deep Dive Stocks has, and it measures how many crossovers occur every day and if those crossovers were bullish or bearish. It then maps those behaviors onto previous behaviors and what the price typically did in those environments. We see here that the data prints were pretty bullish with positive outlooks for the next 5 days. So we have, from LDPM, yet another bullish print. And lastly, we move on to the market-wide gamma squeeze count, which monitors the amount of gamma squeezes throughout the entire market, and it tends to have a very strong association with future price movement. From the 25th data print, we see that the trend line, or the overall rate of change for the gamma squeezes, had peaked slightly above zero, which is typically associated with longer-term market downturns. So the market-wide gamma squeeze count gave us a little bit of a bearish outlook. So overall, there were both bullish data prints and bearish data prints, but the bullish data prints went out overall, both in terms of the number and kind of in terms of their subjective strength that I ascribe to them. VoEx, being the most powerful deep dive stocks metric, had a bullish outlook, so VoEx is what led the charge in anticipating a green week ahead. But it wasn't just VoEx. It was also the VoEx variance and the LDPM crossovers, which gave credence to the idea that there should be a nice price appreciation throughout the week. Nonetheless, there were still hazards and risks that were associated with the upcoming week, namely the lack of purchasing support on SPY should the index start to fall. We saw that should the index start to fall, there would really be no purchasing supports provided by the options dealers, so any buoyant force coming into the market would kind of have to be organic, which is something that is always concerning. So overall, that was a Deep Dive Stocks weekly chat. I hope this video has helped explain a little bit about the data analysis that goes into the weekly chats, and I hope it gave a little preview of some of the data that is available to the premium members. That's all I have for you guys today. My name is Justin. Happy trading, and I'll see you guys next time. Bye.